Hi guys, a very good afternoon from London. Welcome to the Ramscorp Friday video where we take a quick look ahead to the key market moving events next week. So then, in terms of economic indicators, headlines being firstly the US GDP reading, the second reading expected to show an increase to 1.7% from 1.5% previously, and this may gain some further scrutiny given that the Fed will be taking this reading into account ahead of their next meeting. And ahead of that, we did see comments this week out of the FOMC minutes that were rather more dovish than the market expected, and we have seen some expectations of QE rise then, and this will be closely watched going forward. But one thing worth of note, we saw the comments out of Fed's Bullard this week noting that the minutes were a bit stale. There's been an uptick in the US data since the last FOMC meeting, and therefore the US GDP reading will be looked upon to reinforce this feeling that the US might actually be doing slightly better than the market expectations in regards to the amount of QE that is needed. Elsewhere, moving back to Europe slightly, in terms of economic data, we have the German CPI readings. We already know that Germany is the standout economy in the Eurozone, and the CPI readings will be looked to reinforce this effect given the slump seen ongoing in the peripheral nations, namely Spain and Greece being at the forefront of that. And in terms of the peripheral weakness, we do have Italy coming to the market with 5- and 10-year bonds next week. The size for these bonds yet to be announced, but given that the benchmark 10-year will be auctioned from Italy, it will be a barometer of how the market is viewing the Italian situation and how we go forward from here. So that will be one of the key events very much to look out for, given that the ongoing situations with Greece and Spain continue to rumble on. Worth noting that the Greek PM will be meeting the Italian PM early next week, following these meetings we've had out of the back end of this week, with the German Chancellor Merkel meeting the Greek PM and reinforcing their commitment to keeping Greece in the Eurozone and to Greece meeting its targets. Secondly, in terms of the big market events at the back end of next week on Friday, we have the Jackson Hole conference in the US. Not only will Bernanke be speaking, we'll have the head of the Bank of England and IMF's chief Lagarde all speaking at the event, but the key will be the Fed's Bernanke speech due on Friday, the 31st of August. Market participants looking for the chairman's stance following those FOMC minutes, as previously noted, but giving a hint then as to what to expect from the FOMC meeting the week later. The Jackson Hole conference has been a key speech to look out for over the last couple of years, as given a very dovish tone in terms of Bernanke recently, given the pressure the US economy has been under in the global slump. So market participants very much looking to see if the stance of Bernanke gives further hints as to, i.e. the proximity of QE, if indeed it does come from the meeting, and the indicative guidance for what size it could be. We have seen from the minutes that the FOMC were considering all the various options available to it in terms of guidance on the Fed's funds rate, the cutting over the overnight interest rate reserves, or full-blown asset purchases. One thing that could be very much looked out for is whether MBS, mortgage-backed securities, are included in any commentary in regards to asset purchases. But that's enough from me. Hope you've had a good trading week, and we do promise to look to have a slight uptick in volume next week as market participants do start returning from their summer breaks. Thank you.